Q3 and really throughout the end of this year has the perfect setup for XRP. You can see it here. We're talking about generational events that really could set the utility space on fire. It's amazing. Regulatory clarity. The prediction markets are saying it's 50-50. It's a coin flip. A lot of people are negative. It's going to happen, in my opinion. It's going to pass this year because everyone involved is incentivized to do a deal here, whether you're the banks and you want to claw back a little bit from that stablecoin bill, you're the industry, your politicians. This has to get done. We're going to hear from Senator Loomis and also the head of the CFTC how important this really is, and I think it gets done. Stablecoin rulemaking starts to take shape. This is about actually onboarding institutions to use this technology to its fullest capability. ETF inflows, remember, I said this will be the compounder. This will be the accelerant, but the bigger one here, tokenized growth. We got a lot of stories here tonight to go over. Tokenized growth, securities, bonds, all sorts of assets are going to come online. We're going to hear from Evernorth, the interview they did here. That's going to be really the biggest driver we've ever seen in crypto. And guess what the number one blockchain in the world today in terms of growth is? It's the XRP Ledger within RWAs. It doesn't get any bigger than that, and it doesn't get any more important. So let's take a look at this. Again, everyone's saying clarity is not going to get done. The Clarity Act will not pass. I disagree. Let's hear Senator Loomis, and we're also going to hear from the chair of the CFTC.
The House passed clarity almost a year ago. What is holding this up in the Senate?
We've been negotiating on the Clarity Act hardcore since last Labor Day. And it's been an arduous process. As you know, the major monkey wrench was thrown in it when the Genius Act revisions that the banks wanted became a huge issue for us. And I'm really proud of Senator also Brooks and Senator Tillis for working with the banks to find that compromise. We're still working a little bit on DeFi. We're working on that's illicit finance. We're working a little bit on ethics, but we've been working through thousands of hours in negotiating, thousands. And we're finally to the point where we're going to put out a text over the July 4th and give people one last really thorough look at the bill. And then we're moving in July.
This is going to get done, I'm telling you. And the biggest reason, one of the people blocking this is the banking industry. But what do they want? They want to claw back some of the laws, some of, what was put in place by the stablecoin bill. So they are incentivized to do a deal here as well. Politicians, of course, name on the line here needs to get done. Plus, everyone in the administration has huge investment capital in this space. I say it gets done. Let's hear from the CFTC chair, again, how important this bill is.
Final push there on the Clarity Act. Joining me now is the chairman of the CFTC, Michael Seelig. Mr. Chairman, great to see you.
Great to see you.
Thank you so much for being here. So what do you think about the Clarity Act? Does it get over the finish line?
We're so close. We have to get this done. It's absolutely critical that we have federal standards for crypto assets. And right now, we've dealt with a patchwork of state laws and regulations, and it's really been bad for business here in the United States. We want to get this done so that we have certainty, clarity, and consumer protection. Should be a bipartisan issue.
And it really should be bipartisan. And I think DAI the other day in his video really pointed out why it's national security. We have to get crypto regs done in this country. It's so important for business, the future of finance. And I think for that reason, it does get done. Everyone is incentivized to make this happen. And the biggest blockade is the banking cartel there. And it's not about clarity. It's what they already gave up with the stablecoin bill, and we are getting ready to do rulemaking. Now is the time. You better make a deal now, everyone involved here, and for that reason, I think it gets done. It's going to be a huge driver of value. Now, again, the biggest area, the growth vector of cryptocurrencies, we see tokenized equity saw a record $3.4 billion in volume for the month of June. That marks 279 month-over-month growth and 1,400% year-over-year. Massive growth. And again, what is the blockchain that's capturing the most of this growth? Well, it is exactly the XRP Ledger, and that's where we want to be. We have this interview from Evernorth, and they're talking about really what are the areas of blockchain that are the future of finance, spoiler alert, part of it is RWAs and also lending, which is an area we are building out on the XRP Ledger. A lot of new capability coming out there. Listen to this.
So, publicly traded stocks, whether they're in a kind of a derivative form sitting inside of an SPV that gets tokenized, that's probably going to proliferate a lot here in the near term. But the other thing that when you sit back and you begin to think about is, other financial institutions like banks beginning to use blockchain, not because they're trying to create fungible assets, but because they're trying to dramatically improve their collateral management process. And if they can, if they can actually, take out a lot of friction and cost by using, again, a better record keeping system. I'm talking in a lot of generalities here, mind you. But if they can do that, then maybe banks can actually become more efficient at doing more lending. I think about the 25, almost 30 years ago, the syndicated bank loan market. That's a huge market now. Those, banks used to make loans and they're like, well, I'm going to have to balance sheet all of this loan. And then they learned, well, through technology, we can syndicate these loans and we could be the issuer and originator and we could still hold some economic interest in it. And we can help process the payments, but we don't have to hold all of this risk on our balance sheet. I think things like blockchain are going to allow them to apply that to other verticals within the banks that allow them to be able to originate, service, again, maintain some economic interest in it, but ultimately take those off their balance sheets and put them out into the ecosystem, into the private credit markets.
And this is the big deal here. The banks that are trying to blockade this, they're going to benefit from it. So they're just trying to claw back what they can from the stablecoin bill, but it's going to make their lending more efficient. And you heard the first thing there again. Tokenizing stocks and other securities like bonds is huge. Everyone wants to do it. You have your BlackRocks, your Fidelities. They want this. They need this. They want to take markets global. They're going to get it done. And again, the big banking, they're going to get a lot of efficiencies here. They're going to be able to do more lending. It's going to be, a big driver of this economy. And for that reason, I think it gets done. We see Crypto Sensei, agentic payments, RWAs, FX, stablecoins, credit markets, DTCC, SWIFT. Every single lane converges on one ledger. And the volume potential is measured, in trillions. It doesn't get any bigger than this. Great post. And I think that really, when you look at what are the big areas of crypto right now, agentic payments with AI, RWAs, stable coins, payments, these are all areas that XRP dominates in. And it's at a time right now where our contemporaries, Ethereum, Bitcoin is going through a little bit of turmoil right now. XRP Ledger as an ecosystem is really on the same page, firing on all cylinders. This is a great time. As adoption starts, we can jump out here and grab a lot of this market share in the most explosive use cases. Saw this by digital asset investors saying, the adults are calling out MicroStrategy. It doesn't take, we see this from Franklin Templeton, it doesn't take a financial genius to call this out, but no one wants to do it while really the prices are pumping and MicroStrategy is popular. But now people are just stating the obvious that the king has no clothes. This is a problem. Now, this really surprised me. Look at what all MicroStrategy has done. They sold a bunch of Bitcoin. They sold a bunch of stock. They're holding probably 17 or 18 months worth of dividends on their balance sheet. They upped the rate on the dividend. And this sucker, STRC, it's still sitting under $90. That ain't good. This has a $100 par, and that's their mechanism to really borrow more money, essentially, at 10, 11, 12%. That's outrageous, but that's all they have right now. No one's going to give them a bond, and so that's really been cut off. This is problematic. I am so surprised we haven't seen this preferred stock go up. It's trading as an absolute junk bond. But hopefully, again, the market is stable and strategy can kind of hang in there and just be okay. And if they can't borrow more money, probably better for the overall market risk, I would say. Big news today. Brad Garlinghouse says a rare moment where my professional and personal worlds collide. XRP is now the first crypto on the jersey of a major college athletic program at his alma mater. Let's take a look at this. This was a big deal for reasons that a lot of people don't understand. XRP is now the face of the University of Kansas. Again, that is Brad Garlinghouse's alma mater. Kansas Athletic now announces a 5-year partnership with Ripple. This deal makes XRP the first ever cryptocurrency to appear on the jersey patch of a major college athletic program. Again, this is bigger than I think many people recognize here. Let's blow this up here a little bit. My notes on this. Ripple, they're not marketing here. This is positioning as mainstream financial infrastructure. And not just Ripple, the company, XRP, the digital asset. Millions of fans are going to see that brand, that XRP logo on jerseys. Universities are embracing blockchain education. The next generation of finance professionals graduate already familiar with Ripple, digital assets, and, well, XRP. On its own, it's not going to create XRP demand, but you are going to combine this with regulatory clarity, stablecoin adoption, ETF flows, tokenizations, Ripple expanding its institutional stack, adoption, and the strategy comes into focus. Really, what Ripple is doing here, we see. They're not chasing hype. This is building one of the strongest institutional brands in crypto, one partnership at a time. Again, I'm not usually down for these kind of marketing deals, but this is a big one. This is no joke. This puts us at a different level, well, than everyone else, in my opinion. Agentic AI continues rapid growth. So over the last 12 months, the focus has rapidly shifted towards the software layer that allows AI to connect to the enterprise data and applications. Take a look at this chart. I mean, look how fast this is growing. It's just amazing. It's like non-existent, very small, and then kaboom, absolutely massive here. And so we look at XRP Ledger, a leader in this space. We just surpassed 1 million agentic payments. This is from the XRP Ledger Foundation via X402 on the XRP Ledger, time to double down. This is built from day one for exactly this purpose, for micropayments, which are what AI agents are going to be doing. You're not going to have them pay big, huge, multi-million-dollar payments. They're going to do all sorts of little transactions. We know from Coil and in the past, there is not a ledger that is primed to dominate this space like we see the XRP Ledger. And again, they're jumping in here, building out the tool set for it. This is going to be a big driver. We thought 2025 with GPT-5 would be bigger. It wasn't. That was a year of really painful growth, but painful in a lot of ways for artificial intelligence. We got new models for OpenAI, Anthropic, Grok coming out. There's a lot going on. I think 2026 is going to be an exciting year for really artificial intelligence, and it's going to drive a lot of value. Now, the one area we don't talk enough about on this channel is DeFi. Listen to this. Again, this is with Ashish Birla, CEO of Evernorth, former Ripple employee, number probably 4 or 5. I mean, he's been around forever. And he's talking to this executive from Franklin Templeton. Listen to this.
What is stopping big institutions from dipping their toes into the DeFi realm?
Well, it probably boils down to counterparty risk. They don't know who the counterparties are on the other side. And there's a, well vetted and, institutionalized counterparty risk assessment by institutions. And if they don't know who they're facing on the other side, then it's going to be more challenging. I think
that is a big problem. You have to know who you're interacting with. And so at first I was like, you know what, the way they're building out XRP Ledger DeFi, that's not real DeFi, where you're having, the KYC and AML, everyone. But this is what really your institutions are going to demand. So we can have the regular DeFi out there, and that's the leader in liquidity. But this is a very new space, and it could really see massive growth to where ultimately it's even bigger. This is really meeting industry with what they need, not what Jungle Inc. thinks would be a good, DeFi system, but what the banks, what the institutions require to adopt this technology. Let's continue on with this.
More things that get tokenized, so to speak, then the more you're going to see some of this stuff unfolding and unpacking. But, I sleep pretty well at night by and large. But the other thing, when you're talking about collateral and you're talking about DeFi and you're talking about leverage, the one thing that we all have to be mindful of is we have not had a full-blown credit cycle operate across the global economy since the global financial crisis. And, a lot of this infrastructure has grown up post-global financial crisis.
Interesting.
And, I think there could be one of two outcomes either way. Either there's a lot more connectivity. One of those words that were used in the global financial crisis was contagion. Well, it's like, blockchain and networking ecosystems means everything is more networked together, but it also means that you're going to be able to put in place more gates and more collateral processes, through, automation and smart contract where you don't have a human on the other side saying, should I press this button to send collateral one place or another, but it's going to be a little bit more automated, and in that case, you could probably build in more protections during the process. But this is all unfolding in front of us. I'm just pointing out that.
But that's a good point. Like I really, really like where you're going there, because listen, like I think that the first iteration of moving things on chain used the old risk monitoring systems. And I think what you're talking about is like, listen, if you have an automated and programmable interface, you could actually have like a real time, risk monitoring system to go with it.
It's been a long time before we've had a really bad, market with a lot of risk and contagion, but it's coming back. Eventually it does. It always does. And really, crypto and blockchain can help with that. Again, having automated safeguards, being able to, a lot of times you may have the liquidity, but can you get it into place in time to stop, some sort of forced selling or something like that? And then that kind of stuff doesn't just affect the pension fund or whoever it may be. It's going to affect the whole market because it's a cascading effect, and blockchain can help with that. So again, this is about institutional systems. No one has the exact playbook yet, but XRP Ledger has a novel approach here with what they're building out, and it may capture significant DeFi growth. You stack that on top of ETFs, you see a lot of inflows. Deals like we saw today with Ripple and Kansas is going to help really build that brand name so people understand this. From Ripple to the blockchain to XRP, the asset. And you have agentic payments, and lastly, tokenization. Like, it's going to get crazy here. We're at the perfect spot. XRP Ledger, really the last little piece of the puzzle here they're working on is programmability. We need some sort of programmability. But from there, it's off to the races. We're sitting at the perfect place in time and space. You let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.